Today is Monday, July 8th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADM Investor Services, and Alan Bush, ADMIS Senior Financial Economist. Alan, the S&P 500 futures advanced to a new high on Friday. Why did they sell off after the stronger than expected employment numbers came out last week?
Well, it seems rather to be a paradox that would happen where a stronger economy would mean lower prices for the indices, but that's basically how the logic has been as of late. And what it really means is when the economy gets stronger, it implies that there is less need for the Fed to lower interest rates. So that is exactly what traders are looking at. However, other central banks around the world still are on a course to ease credit. So it still appears that stock index futures are in good standing as far as the interest rate situation is concerned. And it appears that traders are looking more at the interest rate situation than they are at the trade situation.
Alan, you've stated that you thought the world economy was slowing down,
Right,
but that the U.S. would remain stronger than others.
Exactly.
What are your
Yes.
current thoughts on the U.S. economy?
Well, that's exactly right. The global economy is slowing. The U.S. economy appears to be slowing as well, but not as much as elsewhere. And now it looks like GDP in the second quarter will come in anywhere between up 1.8 to 2%.
Alan, we've been talking about the bonds quite a bit over the past several weeks. Do you have a trade recommendation in the 30-year Treasury bond futures?
Well, actually, I do. And in fact, it was just last Friday that the bonds made some new highs for the move. In fact, trading at the highest level since October of 2017. So with the employment numbers coming in a bit on the stronger side, that caused some pressure. The next support where I would come in on the buy side for the September 30-year bonds is anywhere between 154 even and 154 and a half. There's a triple bottom there and some other lows that are likely to hold. So in that range, I think, is an excellent buying opportunity for the Treasury bond futures.
Steve, as far as the grain markets go, the focus presently seems to be primarily on weather. What is the 30-day U.S. Midwest forecast?
We've kind of turned the corner as far as too wet, and now we're going in for 2 weeks of drier and warmer than normal conditions. I think that's good for the crops initially. Long-range maps show rains returning to the Midwest after this 2-week drier period.
And is there enough weather uncertainty to push Dees corn over $4.50, November beans over $9, and Dees Chicago wheat over $5.60?
As of today, most of the demand bears say no, that we don't need to trade over that because crop conditions tonight could show an improvement. They could also show an improvement next Monday. The average trade guesses for this week's report doesn't show any major drop in supply, and they actually could drop demand. And so that leaves us up against some pretty strong resistance at these price levels.
Any news in the U.S. and China trade talks? It seems it's been fairly quiet since the G20 meeting.
They're starting telephone conference calls this week between the top people. I think one problem is that there are some very tough preconditions by the Chinese to get a deal. Number one is to drop all tariffs before they even talk. This is on the heels of some rumors floating around that they may come in and buy some U.S. corn, soybeans, and pork as a goodwill gesture before the talk. So right now, the trade is thinking that there won't be anything done quickly, and that they may wait until after the presidential election to be serious about having some kind of trade deal.
Finally, Steve, on Thursday, July 11th, this Thursday, the USDA will share the U.S. and world ending stocks numbers. Any thoughts on what they'll say?
Well, the last few reports from the USDA have been bearish. They've been surprises, so we expect some surprises. The only thing for sure is that they will raise corn acres and lower bean acres, which could mean a little bit higher corn carryout and a little bit lower bean carryout. But still, it will probably be until August until we have a better idea on what our this year's yields are going to be and just how much exports are going to be down because of competition from the Black Sea and South America.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.